Palantir has just recorded record-breaking earnings, pushing its stock price to an all-time high. This rally caused the stock price push over $50 for the first time in the company's history. But with its sky-high valuation, could this be a bubble in the making? Stick around and find out my opinion and what would I do in this type of a situation. Today we are looking at Palantir's latest earnings. It's hard to ignore the excitement that is sweeping through the markets. With impressive revenue growth, careful management of costs, and a great outlook for Q4, Palantir has positioned itself as a high-growth company. But as the shares climb, it's worth asking, is this valuation truly sustainable, or are we in the midst of an overvaluation bubble? Let's dive deeper into the numbers and explore what this means for value-minded investors. So what led Palantir's stock price to go over $50 for the first time in the company's history? In their third quarter, the company reported $725 million in revenue, which is an increase of 30% year over year. Not only did the company beat Wall Street's expectations, but they are also set up for another strong quarter. They're forecasting their Q4 revenues to be between $767 and $771 million. Now that's well over market's expectation and just goes to show how efficiently Palantir is able to scale up. But what really catches my eye is Palantir's high gross margins. Out of this quarter, $725 million, $578 went straight to gross profits. That is about an 80% gross margin, which is exceptional and shows the level of efficiency we usually only see in the top tech companies. For example, a great company like Microsoft has a 70% gross margin, while Google is closer to 60%. Based on this, Palantir is clearly hitting all the right notes operationally, delivering revenue growth and controlling costs. But as we'll see, these fundamentals alone might not justify the current valuation. So let's talk valuation. Palantir's stock currently trades at an eye-watering price-to-earnings and price-to-sales multiple. At the time of this recording, Palantir is trading at nearly 300 times earnings and has a price-to-sales ratio of about 50. To put this into perspective, even many high-growth tech stocks don't reach these levels. Palantir is in a league of its own. While the company is hitting impressive revenue numbers, these crazy multiples could imply that the tremendous growth could already be priced into the cost of the stock. Let's compare it to the same two companies. For example, Google's price-to-sales ratio is closer to 6, while their PE is closer to 22. At the same time, Microsoft's price-to-sales ratio is around 12, and their PE is around 34. Even though these two companies are already massive, and they might have less growth in them, they are still considered as high-growth tech companies, but they have much better multiples. An additional factor to keep an eye on is Palantir's approach on stock-based compensation. In the past quarter, the company provided $49 million in stock compensation for employees and executives. Now, incentivizing talent is important, and Palantir's growth strategy reflects that. But over time, frequent stock issuance like this could gradually dilute stockholders' value if not carefully managed. So if you're an investor who's prioritizing steady and undiluted growth, this is something to keep in mind and keep monitoring. This is not the first time we see high growth stocks reach bubble territory due to investors' hype. During the dot-com bubble, Pets.com stock price soared to $11 at the peak of year 2000, only to crash back down to less than $1 within a year. More recently, Tesla's stock price surged over 700% in the year 2020, driven by the excitement around electric vehicles. However, the stock faced strong corrections when concerns about its valuation emerged. Another great example is Zoom. During the pandemic, the stock rose over 400%, only to fall more than 80% by the end of 2022 as the market adjusted to post-pandemic conditions. Yes, Palantir has enjoyed explosive growth and a lot of attention. However, as we see from the examples before, overly optimistic valuations can cause sharp declines when reality sets in. If the market sentiment shifts or Palantir's growth slows, Palantir could be facing a serious correction. So, could Palantir be considered as a value investment? On the surface, it does have some features that might catch the value investor's eye. It has high margins, rapidly growing revenue, and a fairly solid cash flow. Palantir has also done well to control their operating expenses, showing discipline that we don't always see in growth companies. But still, the hard valuation is really hard to ignore. For a stock to fit the value investing profile, you want to pay a reasonable price for its intrinsic value, not a premium for growth that might actually be already priced in to the company's cost. So while Palantir's fundamentals are strong, the price you're paying today is still based on future expectations, which do not necessarily fit with value investing principles. So what are my thoughts and what would I do? In my opinion, Palantir is a great company with a lot going for it, and these recent earnings results are truly impressive. However, as a value investor, at these levels, I would approach the company with caution. In my opinion, at these levels, the company is simply overvalued. And while the growth is exciting, the premium investors are paying is quite hard to justify. If I would be holding Palantir, I would consider taking profits to protect against the potential downside. I would be waiting for a more reasonable entry point in the future. That said, Palantir remains an interesting stock to keep on the radar. With its innovating model and potential for the long-term growth, I'd be very interested in owning this company if the price would drop significantly. However, at this point, the drop would probably have to be at least 50% for me to just look at it again. Do you yourself own the stock, and what are you doing with your position? Or maybe you're thinking to add or start a new position in Palantir. I would love to hear your thoughts and opinions in the comment section down below. And as always, guys, thank you for watching. If you stayed this long, please consider subscribing as it helps me to grow the channel. If you have any suggestions for other types of videos, please leave them down below. Thank you again, and I hope to see you in the next one. Bye.